You know, when it comes to taxes, we are all looking for any little edge we can get to reduce what we owe. But what if I told you there's a federal tax credit out there specifically for seniors and people with disabilities that most of the people who are actually eligible for it never even claim? Well, today we're going to unlock one of the most overlooked breaks in the entire tax code. So here's the big question for you. Could you be missing out? This credit is, well, it's notoriously tricky, and its real value, the thing that makes it so important, is often buried deep in the fine print. So let's figure out if this is something that applies to you. Okay, let's dive right in. The form we're talking about today is called Schedule R, the credit for the elderly or the disabled. It was created to give a little bit of financial relief to taxpayers who have limited incomes and have either hit retirement age or are living with a permanent disability. Now, to even get your foot in the door for this credit, you first have to be what the IRS calls a qualified individual. And, lucky for us, there are two very distinct ways you can meet that definition. It's actually pretty straightforward when you break it down. Path number one is all about age. If you're 65 or older by the last day of the tax year, boom, you meet the initial test. The second path is for folks who are under 65, but they've had to retire because of a permanent and total disability, and are getting taxable disability income. The key thing is you only have to fit into one of these two buckets. All right, so meeting that age or disability test, that's just step one. The next part, well, this is where most people get knocked out of the running. This credit is specifically for people with very, very limited incomes, and the thresholds are incredibly strict. And just to give you an idea of how strict we're talking about, look at this number. For a single person, if your adjusted gross income, that's your AGI, is $17,500 or more, you generally can't take this credit. That is a really low ceiling, and it's the number one reason this credit is so rarely claimed on federal returns. And here, this table really lays it all out. See, the IRS looks at two different things, your AGI, which we just talked about, and also your non-taxable income, like your Social Security benefits. If you're over the limit on either one of these for your filing status, you can't claim the federal credit. As you can see, there is just not a lot of wiggle room here. Now, for anyone trying to qualify through that disability path, there's another pretty big hurdle. The IRS has its own very specific definition of what permanently and totally disabled means. And, this is super important, it is not the same definition that your private insurance company might use. The key phrase here, the one you really have to pay attention to, is any substantial gainful activity. That is the absolute core of the IRS definition. It's not about whether you can still do your old job. It's about whether you can do any job that brings in a meaningful income. This quote just nails the difference perfectly. Your insurance policy might say you're disabled because you can't perform your own specific job anymore, but the tax code, it uses a much, much tougher any occupation standard. And here is a perfect, real-world example of what that means. Imagine a surgeon develops a hand tremor and can't operate anymore. For her insurance company, she's disabled. But if she can pivot to teaching medicine or maybe doing administrative work at the hospital, the IRS says she is not permanently and totally disabled for the purpose of Schedule R. Okay, so right about now, you're probably thinking, all right, the income limits are crazy low, the disability rules are super strict, why are we even talking about this? Well, hold on, because this is where things get really, really interesting. Even if you go through all the calculations for your federal credit and the result is zero, filing this form can still be one of the smartest tax moves you make. I know, it sounds completely backward, right? Why would you possibly go through all the paperwork for a federal form that's going to give you absolutely no money from the IRS? Well, the answer isn't in Washington, D.C. It's in your state capital. So for example, let's look at a state like Michigan. Their tax code is all tangled up with the federal forms. Tax pros there will often fill out a federal Schedule R, even knowing the credit will be zero, because the numbers from that form are absolutely essential for calculating and maximizing some really valuable state-level benefits for seniors. And the example from Minnesota is even more direct. They have their own awesome subtraction for seniors and the disabled, but to get it, their instructions often say you must attach the federal Schedule R to your state return. If you skip attaching that useless federal form, you could be flat out denied a major state tax break. So whether you're trying to get that federal credit or more likely you're trying to unlock a state benefit, it's really important to know the steps and to file with care. The process itself is actually not that complicated. First, you confirm you're a qualified individual and that you're under those income limits.
Second, you fill out Schedule R to do the math. And finally, you just attach that completed Schedule R to your main tax return, your Form 1040.
And hey, one last piece of advice, especially when you're claiming a less common credit like this one. The goal is always to file accurately so you can avoid any unnecessary headaches or reviews from the IRS. Simple mistakes can sometimes raise red flags. You know, the most common red flags are usually the simple things. Basic math errors, forgetting to report all your income from a W-2 or a 1099, or taking deductions that seem way too big for your income level. Double-checking your work is always worth the time. So the crucial point here, and if you remember just one thing from this, let it be this, is don't just dismiss Schedule R because the federal income limits are so low. The real power of this form might actually be its secret ability to unlock much bigger, more generous tax breaks on your state return. The tax code is, let's be honest, a massive and complex place. But this just goes to show you how a little bit of knowledge can uncover some really unexpected savings. It really makes you wonder, doesn't it? What other valuable credits might be hiding there, just in plain sight?